Hi everyone, welcome back to Be Rich. I hope you're doing well wherever you are. Here in Tamil Nadu, we seem to be having some rain, and so I hope you are safe. If you are in Tamil Nadu, Chennai seems to be a little bit troubled by this spell of rain because of all the metro construction which is going on. So if you are in Chennai, do be safe as you venture out, trying to get your work done. For those of you who are joining us from other parts of the world, I'm sure things are fine over there, especially as having a conversation with one of our followers in Japan. Things seem to be very nice over there. Getting back to the point. We did a video a few days back about the idea of 2,000 rupees a day and how that can become a crore in less than 10 years. And there's a second part coming to that, which will come probably end of the week. Keep an eye out for that when that comes to conclude and share the Excel sheet which we did. But I was thinking, what if we take that thought experiment and move a little forward? I do agree, for some of you, 2,000 rupees a month is a colossal amount of money. And even if you're looking back at 2009, 40,000 rupees a month could be like a lakh. But believe it or not, some of you who are working in IT, who are especially in their mid-30s and late 30s, who are earning double income, have been talking to me and chatting with me. And, it is doable. So I was thinking, let's say, we do this front loading. We decide, to forego these holidays, to forego buying another car or forego doing some kind of expenses which we deem unnecessary for the year, keep that same iPhone for a few years longer, maybe not buy the latest device for our children, and decide to invest for 5 years. And let's say we manage to squeeze ourselves to doing this, where we invest 40,000 rupees today, right? For those of you who can do more, you can definitely look at more. At the end of the video, I'll give you another fabulous calculation of what you can do. So what is the secret behind this thought experiment is we do Tata index fund. Like how we have the Nifty index fund, we have sectoral funds. So we stick to the 10 big Tata group companies. And let's say we shorten the span. Instead of saying 15 years, let's bring it down to 5 years. And the companies we are going to be investing in are TCS, Titan, Tata Motors, Trent, Tata Steel, Tata Power, Tata Consumer, Indian Hotels, and Tata Communication, and last but not least, Voltas. I know, it's a nice mixed bag of companies. It covers a lot of sectors. Why Tatas? Because Tata is a backbone of the Indian economy. It is a company which is over 150 years old, started by Jamshedji. We have done many videos about that. And they're involved in industries as varied as salt, chemicals, IT services, infrastructure, automobiles, steel, you name it. I mean, the company names itself, which I've said, gives you a great idea on why. And as a value investor and as a investor in general, Tata is something all of us keep in mind and we try and consider. So why am I saying 5 years? Because the funny thing is, I was poring over the data, which me and Rupesh were doing. Rupesh and me sat and we poured over the data and we came out with this interesting thing that TCS from the last 5 years has come up by 113%. Titan is up 192%. Tata Consumer is up 185%. Tata Steel is up 252%. Voltas is up 164%. Tata Motors is up 352%. And Indian Hotels is up 488%. Tata Communications is up 368%. And Tata Power is up 705%. And the real outlier in this whole bunch, which seems to be pulling this whole equation to one side, lopsiding it, is Trent, which is up 1,294%. In terms of CAGR, if you look at it, we have TCS at 16, compounding at 16 for the last 5 years. Titan is compounding at 23, Tata Consumers at 23, and Tata Steel at 28, Voltas at 21, Tata Motors at 35, Tata Power at 51, Indian Hotels at 42, and Tata Communications at 36. And of course, the outlier Trent, which has been compounding in the last 5 years at 69. I've got all these graphs, and I'm sure Rupesh would throw these graphs up on the screen as I'm talking, and you can see on comparison how one has been comparing to the other. So if you see, all of them, other than Trent, which when you throw it onto the comparison graph, it throws everything out of the water. Everything else has been doing pretty well. And the average CAGR for these 10 companies is 34%. So if you have been investing in these companies over the last 5 years, you would be averagely compounding at 34. So if you've been putting 40,000 rupees a month in these companies, divided into these companies for the last 5 years, your 24 lakhs would have turned into around 56 lakhs. You would have gained 32 lakhs and your asset would have grown by 134%. But then the question begs, Vinod, we only buy value. So what are you talking about? These companies are very expensive now. So I thought we'll dive into this and see where was the PE ratio of these companies at the time 5 years ago and where they are now. Has there been any dramatic shift in the PEO warranting this kind of growth? Or is it the company themselves are growing with the economy? So this gives a lot more analysis as a value investor than the rest of it. So this is where I would really pay more attention through the PE. TCS PE has gone from 25 to 33. Titan has come from 73 to 95. Tata Consumers has gone from 40 to 67. Tata Steel has come from 7 to 61. Voltas has come from 44 to 108. Trent from 181 is at 183. That is phenomenal, meaning back then itself the PE of Trent was really expensive. It was 181. And today it's still expensive, 183. But the share has been compounding at 69%. Earnings has been justifying this kind of price for at least last 5 years. Of course, this is looking back, this is hindsight. There's no way I can tell or anybody can guarantee that next 5 years, Trent is going to grow at the same clip it has, that it's going to do the same thing it's going to do. But that is a curious thing, which, as they say, I'll leave it in your mind to think about, for you to dwell on. The man who did it all for Trent is Noel Tata, and Noel is now running the whole group. That makes you wonder a little bit. Keeps it interesting, doesn't it? But anyway, Tata Motors had negative earnings, so really the PE doesn't count. But now the PE is at 8.7. Tata Power from 19 has gone to 37. Indian Hotels is 55 to 82. Tata Communications gone from 40 to 70. So if you look at it, even 5 years ago, using our basic analysis, the only company maybe you would have even looked at is probably TCS, Tata Steel, and maybe Tata Motors, Tata Power, because of the metric of, being in a low PE, then we should look at a high PE. But if you really look at it, these companies seem to have certain things which seem to exclude them from the usual rule and the norms we look at. We do have to consider that in mind and keep it in your thought process. Remember, this is a thought experiment. I'm not asking you to go buy Tata Group companies, all these 10 companies every month. That's up to you if you want to consider it at these price points. I'm not doing it, right? So don't immediately say, Vinod is looking at it, Anand's looking at it. It's not. It's just a thought experiment. I just want to cajole you into thinking differently and seeing opportunities. And why would I say Tata company? Because as a value investor, as a new investor, or even as a high net worth individual, let's say you are making upward of 3-4 lakhs, 5 lakhs a month, you can definitely put 1 lakh a month into stocks. If you're making 5 lakhs upward a month, that means post-tax that means you're earning more than 1 crore. Your wife is earning, right? Or your husband is earning dual income and you're going well over 5 lakhs a month. You can definitely invest 1 lakh into this kind of an equation. And if you guys had been investing 1 lakh a month for 5 years, that's 60 lakhs. That would be right now at 1.5 crores. In 5 years, that's a option of investing. This is a specific case of only Tata Group of companies. Would I do the same with other groups? I don't know. I really don't know if I would have the courage to venture like this in, let's say, in the Adani Group of companies. I wouldn't. I would have heartburn, because the reason why I consider Tata Group is because of the ethics the companies are run with, the philosophy these companies have, the long history these companies have, and just generally, we know them for such a long time. So I feel safe. Even if I'm looking at 5 years ago, if I was looking at them valuations of these companies, even if it was eye-watering, if I was new and I didn't know much, but at least I know the Tatas have been there for a long time and they continue to be there. And they're a very important part of not only India, but the globe. Like TCS is the second largest services company in the world. Tata Motors is a global company with Jaguar. And all these companies are massive in terms of size, in terms of operations, in terms of revenue generation. And they become, as a group, Tata Group has become debt-free. And they have huge ambitions. And they're led by a very forward-thinking, visionary young person, Noel Tata, and really put my mind behind it if I wanted to make an investment and look at some option as a value investor, especially in this current market where there's a lot of volatility and you don't know what to do. So this is a thought experiment I wanted to give you. Let's say we had a Tata index fund, like the Nifty. Would you invest? What do you think about this? Just taking the top 10 Tata companies and investing for the next 5 years. Should I do this? Let me know in the comments. Should we open up a new account, for a thought experiment? And since me and Anand have been sitting and doing this YouTube for the last 5 years, take it as a challenge and, drop some coin in this and see where it goes in 5 years. And then we can review it. If you would like me to do such an experiment, a long, prolonged value investing experiment, or you have any other idea in terms of a long value experiment we can do as a group, put it down in the comments and maybe I'll look at it. Or come and join me and join all of us in the group which I have called the 52-week challenge over on Instagram, and give me your thoughts and feedback on this too. I am created this group on Instagram. If you go into my handle, under my handle, you find this group called 52-week challenge. You can click and join the group. And whenever I put any messages and any conversations we have, it will come as a notification in your chat in Instagram. As I was recording, the market is down today. Seems to be a lot of selling. I don't know by whom, maybe the FIIs or the DIs. If you do notice, I've been sharing those screens or what the FIIs and DIs have been doing over the last few days. Every day I share it in the morning with you guys in the group. So we've been seeing sometimes they've been buying this month, maybe they're net buyers this month so far. But like I said, because of Christmas and New Year, you can't really predict where it's going to go. Anyway, if you found this video informative and interesting, do like and share. Do share with people and friends who might find this kind of content interesting. And I'll come back and maybe I'll try and do something similar with some American stock. And let's say if you're sitting outside in India and you could invest in American stocks, or you're sitting in India and you're forking out over 7 lakhs a year, what could be some options? You can do something similar like this. If I should do a thought experiment on some companies like this in the US, let me know in the comments and I'll probably come back with that. With that said, be safe out there. Like I always say, invest wisely and slowly and smartly. Do get yourself a financial SEBI registered investor advisor. It is highly critical that you have one. Nothing else more to say. See you tomorrow with another one. Thank you.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.